viewers. Today I'm going to be updating you about the European stock market and the bond yields in England and other countries. European stocks fell 1% within the 2 year. The 2 year British bond yield at their highest in 15 years, reaching 6%, and the oil prices falling as deep as $1. European stocks fell, and the PEM European Stock 600 extended its losses after midday, falling more than 1% and closing near daily lows, giving up all the gains since Tuesday, and also falling from the highest since May 22nd, with the chemical stocks falling more than 2%, leading to the decline. German and French stock indexes also fell. Experts warn that rising loan costs have affected property deal renewals and have reported its effect over the economy. European construction stocks also fell more than 2% on Monday. U.S. stocks index future fell slightly on Monday, with the Dow futures falling more than 120 points, and continuing Friday's closing trend of more than 100 points, and S&P 500 and Nasdaq futures falling 0.2%. On Friday, both the S&P 500 market and the Nasdaq stopped their 6-day winning streak. With Bank of England rate hike imperative this week, shortened UK yields, which are more sensitive to monetary policy, rose significantly, with 2-year yields rising more than above the 5% mark in late European trading, and rising 14 basis points on the day, the highest level since July 2008. The yield on the 10-year German bond, the benchmark for the euro, rose more than 5 basis points to 2.52% to a new intraday month high, and the 2-year yield rose as much as 4 basis points to 3.21. The yield on the 10-year Italian bond, the benchmark for the eurozone more than debted periphery, rose more than 8 basis points to 4.12%, as spreads with Germany's base bonds, a key measure of market confidence, widened and fell below 150 basis points on Friday. Markets are betting the ECB will continue to raise interest rates, with peaking interest rate at 4% this September. However, the adverse impact of rising interest rates may also affect the European Central Bank about its contractionary monetary policy. The demand prospect caused the international oil prices to fall more than 1% intraday, stopping at the 2-day winning streak. Finally, Brent crude oil futures for August ended down $0.52 or 0.68% at $76.09 a barrel. U.S. oil WTI July future fell as deep as $1.15 or 1.6%, but more actively traded August future also fell more than 1%, $1 or 1.5%, losing to $71 on a daily low. Both oil prices rose more than 2% last week, and the number of oil and gas rigs operation in the U.S. fell for the 77th straight week. However, the possibility of OPEC Plus cutting output but increasing exports, as well as Iran's oil exports and production hits record high this year, have weighed on the prices. European benchmark TTF Dutch natural gas futures turned slightly lower in late trading, losing the 35 euros per barrel integer, and the ICE UK natural gas future fell 1.6% and briefly fell below 780p per kilopascal. Euro towards dollar turned slightly lower but held above 1.09, hovering at 1 month high, while the pound sterling lost 1.28 against the dollar, falling away from the new 13-month high. The yen fell as low as 142 against the dollar, and a 7-month low, and fell to a 15-year low against the euro. The offshore yuan fell to 7.16 yuan, down 400 points from the previous close, approaching the lowest level since late November. Mainstream cryptocurrencies fell. Bitcoin fell 0.5% to 26,400, pushing its 1.5-week high since June 8th. Ethereum, The second largest fell more than 1% and lost to 1,720. The US dollar went under high pressure and low gold price. Spot gold fell as steep as 0.5% or more than $10, losing the individual level of $1,950. Some analysts say that the risk of a Fed raising interest rates once or twice in the short term may weaken the attractiveness of gold. London's industrial base metals closed lower across the board, raising concerns about demand outlook. London copper fell 0.3% after hitting $8,634 on Friday, the highest since May 10th. Lune aluminum fell 1.3%. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.